Oh, we are so glad you could join us today. We're watching your ag commodity markets for you, and we're getting ever closer to the release of the supply and demand numbers from USDA. They will come out at the top of the hour. In the meantime, the markets are dealing with and digesting all kinds of information coming from all directions. It's dealing with the weather, it's dealing with China, it's dealing with USMCA, it's dealing with all kinds of stuff. And here to talk about it, we have Brian Hoops on the line. And he is with Midwest Market Solutions. He is in Springfield, Missouri. And Brian, I wanted to get your take on this. The corn market pretty quiet today, just not doing much of anything. And I don't know if it dares to go any direction right now because of all the crossfire of news headlines today.
Yeah, right. Yeah, Marlon. Normally on a crop report day, we're talking about the report and how the markets are quiet, waiting for some information. In fact, we've got a lot of information prior to that report. Markets trying to digest the USMCA agreement, whether President Trump administration is going to have the tariffs on December 15th, if they're not going to have them. We've heard conflicting stories this morning, and so we're kind of back and forth, and the market's just kind of sitting there kind of patiently waiting to get things ironed out. This report is probably not going to be really eventful as far as U.S. supply and demand numbers go without any production figures coming from the U.S. We're going to look at South American production numbers, U.S. ending stocks, that sort of thing. But, this may be a day where the report takes a back seat to the other news items.
Let's take a look at the corn market right now, and it has been just kind of floating around either side of unchanged here so far today. On the futures in Chicago right now, we have the March contract. It's still just a half cent higher at 376 1/4. Just not doing much of anything, although you have to give it credit for having a firmer tone. If you look at soybeans, they have been hanging in there with gains of 2 or 3 cents here. We have March now trading 3 higher at 914 3/4. And on the wheat market, the wheat has been kind of the laggard here today. It's been dragging its feet. March wheat in Chicago now down 1/4 cent at 522 1/2. I will have to mention that it is about 3 cents off of its earlier low of the day now. By the same token, Kansas City wheat was struggling early, but now it has come back. And now it's 1 1/4 higher on the March at 427 1/4. By the way, the March Minneapolis wheat is just fractionally weaker right now, down 3/4. Brian, this wheat market here, it's really been having a hard time getting any kind of traction as it moves into the holiday period here. Do you think that the wheat market can benefit from any of these agreements as kind of a side benefit or not?
It would be nice if we were able to. Egypt has a tender out there right now, and what it tells us is that we're not even competitively priced on a world basis. We're not one of the tender offers for any wheat. It looks like it's probably going to Russia or to France or a combination. And that's why we've seen wheat prices on the defensive for the most part here today is we can't rally too far. We're already out of the price range of trying to be competitive. But there was support just a little bit below Kansas City lows this morning around 423. We bounced off of that. That support goes all the way back to October 31st. So, Chicago's made some strides here recently, but Kansas City's really gone into a sideways trading pattern, and now we're testing the downside of that pattern.
So on the soybeans, this would be 5 days in a row to the upside, and we'll see what these supply and demand report numbers have when they come out at the top of the hour to see if they can give it any impetus to keep going in that direction or not. We'll pause right here, Brian, and then we'll come back and we'll take a look at the impact on the livestock trade from all of this stuff circulating around the markets, and we'll be back in just a moment. Brian Hoops, he's our guest. He's with Midwest Market Solutions. He is in Springfield, Missouri. And when we talk about our livestock side, Brian, let's take a look at our cattle futures first to get things rolling, and then we'll talk about this a little bit. On the live cattle board right now in Chicago, as we go to the futures, we're a little bit weaker, not much, just a little bit. February down 13, now down 17 at 124.58 on the day. That would put us within about 15 cents of our low of the session. About 60 cents off our high of the day. Lower across the board. On the feeder cattle market here, we have the feeders showing gains across the board. We have March up $0.50 at 142.78. Pretty consistent there with gains like that. And if you look at lean hogs, right now in the lean hog market, you currently have the December up 13, but February, look at that, up 65. It's at 67.35, but it's about $1 off of its earlier high this morning. It went rocketing higher after the open, but now really easing back, and now the deferreds are over $1 higher, but that's it. So, Brian, have you heard any cash cattle trade yet today, or is it just too early in the week?
Yeah, it's really quiet right now. Bids and asking prices have not been established. What pattern we've ran into the last several weeks is we've waited until the Fed cattle exchange on Wednesdays before we start to see packer bids starting to surface and asking prices developing out of the country. And we may follow that pattern once again, waiting until what demand shows up on the cattle exchange and go from there. But right now we expect the cutout values to be down a little bit, and that could hurt our cash markets this week, especially with the show list being just a little bit larger than last week. We may see more of a steady type market than that steady to $1 or $2 higher that we've seen over the last several weeks.
So the China trade news that the tariffs may be delayed, that was rumored to be helpful to the hog market before the open today. Now with this USMCA development, where it may get passed here in short order, is that going to give the hog market an extra boost, an extra kickstart, if you will, to help it get away from these contract lows?
Well, I don't really think so. I mean, I think we pretty much known and anticipated that the USMCA is going to be ratified. It was going to take place, and it was just a matter of time before it was signed. It's the China deal that really got the trade excited early this morning when it talked about removing some of those tariffs on December 15th. Since there's been some comments coming out that those tariffs may be back in play, the market's backed off, and that's what I think really would excite this hog market, is if we can get some sort of a Chinese agreement made, or if we can remove the tariffs temporarily, we could see a pretty sharp run in the hog futures.
All right, thanks, Brian. Appreciate it. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So, Christina, all we want for Christmas is some peace in the markets.
Better weather, trade certainty,
Well, that
the
too,
list
yeah.
goes on. Good soil. Thank you.
Sure.
Appreciate it as always, Marlon.